Good morning, traders. Welcome to our London webinar. This is what we normally do daily. Two webinars, London Open, New York Open. We go through the charts, we look at the setups, we see if there's a trade set up for today, and we look for that trade to trade during the day. If the trade is active during the webinar, we will take the trade. If it is not, I'll show you the setup and you will take the trade. Now, I will not give you entry points, stops, and targets. The reason I don't do that is because that depends on the strategy you're using. And unless you have tested that strategy you're using, it's useless to you, right? If I give you, I'm giving you my strategy, and you have not tested my strategy. I know you have not tested my strategy, which means psychologically you cannot manage the trade the way I will manage the trade. None of my traders will ever ask me for that because the strategy they're using, they have tested, which is pretty much the same strategy I used. They've tested it. They know how it works. They know how to manage their trade. If they're really getting difficulty in doing that, they can go into our trading room and ask for advice. There are senior traders in there. I am very often in there. And, we can help each other there. If they post something in our Skype chat room that they need help, I'll be there. They can send me a private message if they need help, and I'll be there. Right? You don't have those options. You don't have access to the trading room. You don't have access to my personal Skype to ask me for that advice. Or if you do, I may very rarely just give you a basic understanding of what you can do. Right? I can't give you my strategy because you don't use my strategy. And you don't have, access to all the senior traders in our trading room. So for that reason, I wouldn't be doing that. But I'll give you a sense of direction of what I think the chart is going to go and what I am looking for. Right? So let's go. We always start with the dollar index, and we're looking for what the dollar index is going to do. Yesterday, we looked at it, and we said the trade we'll be looking for basically is the breakdown of the dollar index of this corrective structure to the downside. There was a chance that it was going to bounce here to go back up, and it did bounce. As you see, they bounced off of this to the upside. So what we will be looking for is mostly a three-wave pattern. 1, 2, and a three-wave pattern. A break of this top is what we're looking for, the break of that top. When they break that top, probably hit this target, we're probably going to look for a retracement back here, which would be an impulse, a correction, and an impulse. Right? So there may be a very, very short trade to the upside. I am not interested in that trade. Right? It's not a great setup for a buy. So you may ask the question, but it's going up. And I'm going to tell you, based on the patterns that I'm looking for, it is not a great trade, even if it goes up 200 pips, because I don't have a setup to buy it, right? And all my traders see exactly what I'm talking about. When I said we're not looking for a buy, we're looking for a sell. If it keeps going up, we would ignore it, because based on the pattern we're looking at, we don't have that. Now, we're not going to go very deep into those. If I was only with my traders in here, I would have explained to them using the analysis we use and showed them why we are not looking for that. I cannot do that in this room. Sorry, we really can't do that in this room, because that is what, I'll have to go and teach all of you 6 weeks before I can show you that and before you can understand it. But my traders can see why we are not looking for a buy. So what we're looking for today is a sell setup. There is a very, very high probability we're going to break this top. We may even get to that 270 target you're seeing there. Now, that's about how many pips? That's about actually 95 pips. But here's the deal. You're going to be risking about 100 pips for that 95 pips. And you're trading in a corrective structure. So a one-to-one risk in a corrective structure is not a good trade for me. It's definitely not a good trade for me. So I stay out of trade like that. I want a 5-to-1 trade, a 3-to-1, a 4-to-1 trade. Right? And those are the trades in the direction of the impulse. And because that is going to happen pretty fast. You see, when they're making an impulse, it's pretty fast. So the next impulse to the downside should be pretty fast if it happens. If it doesn't happen, then so be it. I'm not in the trade. That's it. Let it go without me, right? I want to catch those trades that are going to make a very fast impulse in the direction of the trend and go with us. Right now, we are in a corrective structure. This entire structure is corrective, as I showed you yesterday. And there is a very high probability of this thing coming down rather than going up. right? That is how the charts move. Look at this. 1, 2, 3. 1, 2, 3. This is the trade I'm looking for. This is the trade I'm looking for. Just that you see what I'm looking for. If that happens, I take the trade. If that doesn't happen, I ignore the chart. Not interested. Let's go. Euro. That means for me, euro, the trade for the euro should be to the upside, not the downside. We spoke of that yesterday, and we spoke of the fact that there is a high probability that they're going to break this low. They're going to come to about the 618, and then they're going to go up. But the trade for me is to the upside, not the downside. If it keeps going down, I'm not interested in the euro. I'll just let it go. Right? I'm interested in the upside. And there are many reasons for that, which, of course, we can't go into details because it's a free webinar, right? But just so that you have an understanding of what we do. Basically, in my class, in my webinars that I'll do it only with my traders, I'll show them a few things why I think that is not going to happen. But I can explain a few to you as well, which is this is an impulse. We're in a corrective structure, so we're looking for the next impulse. If it is to happen, if they're going to crawl down slowly to break this low, which they can possibly do, which is come here, probably go back up, come here, probably go back up, come here, we will still be looking for that up move. If I see a structure like this, I'm still looking for the up move. And there's a reason for that. Right now, I don't think, based on what I'm seeing right now, based on the pattern that I'm seeing right now, I don't think that is going to happen. But if that should happen, what I'll be looking for is this: break this structure, consolidate like this, and now I'll be looking for a sell structure. I'll be looking for a sell signal to the downside. I would take this sell if this structure happens. If that structure doesn't happen, I'm not interested in a sell from here to here. It's the same reason. Even if it goes, it is going to go 98 pips, and I will have to risk. I'll have to risk 166 pips for that. Not a good trade. It is not a good trade. And if you don't understand that, you probably need more knowledge in trading. Right? If you don't understand it, you don't have to chase the candles while they're moving. You're in big trouble. And if you think you can take that trade and put a 10 or a 15 or a 30 pip stop to it and you will win, you're likely going to lose the trade. And you may even watch it go down. First, it's going to go up and take you out. First, it's going to do this. It's going to keep going up and take you out. Come to the top here, take you out with your 30, 40, 50 pips, maybe even 100 pips, because remember, this is 166 pip stops. It will take you out, and then you will watch it do this. Well, guess what? If it does that going up there, we will take this trade, because now the risk to reward in that trade has increased. Let me show you what the risk to reward in that trade would be. If this thing goes up here, we will get a trade that will give us approximately about 163 pips with a stop of approximately 70 pips. Not the best trade, but a good trade, at least 2 to 1, a little more than 2 to 1. So it's the difference of how this pattern is going to behave, whether we take the trade or not. If it is going to come down from where it is right now, come on. If it is come down from where it is to here, I'm not interested. So let it go. And there are times when we look at the chart and we can say almost with 99% accuracy that it is going to do that. But we're really not interested in it. Because you know where it's going to go. But in terms of trading, it is not a good trade. And that's what traders have to understand. Forecasting the chart is just a part of the whole deal. It's something that you must know. You must be able to forecast the charts if you want to become a good trader. It's like you want to become a good writer, you probably need to know the alphabet. Right? If you don't, you're never going to be able to write anything. So the elementary, the basic thing you need to do is how to forecast the charts. And after that, when you know that, when you have that knowledge, it's intact, you have it you're well versed in that knowledge, then you decide how to trade it. Then you decide what trades are good trades to take. Then you decide what money management you're going to use to trade. And you decide what risk management you're going to use to trade. Money management and risk management are two different things. Absolutely two different things. What I was just showing you is called risk management. How much you need to risk and how much you're going to be rewarded with. Money management is how much you're going to put in, how much money you're going to be putting in that trade if you do decide to take the trade. What percentage of your account you're going to risk in it. Right? So those are two different things. Let's go. So for today, I think we really may not get a euro trade unless it comes to the bottom here and I see something that I like. So, or if it goes up back to the top here, if they do this, back to the top here, we will get a trade to the downside. In any case, it's not going to happen today. That will take you about 12 to 16 hours if that is to happen. And then tomorrow, we will take this trade. If that doesn't happen and they come down here, actually, I want them to come down there and then start the uptrade because the uptrade I'm interested in. It's going to come down and it's still going to go back up. So it may take them this whole week to consolidate within this zone, and then we will decide what to do with it, right? So on the Pong is a better option for us right now today. I think this is the best option we have. As a matter of fact, I showed you this yesterday, and I said I'm not interested in that sell. Even if it goes down, I'm not interested in the sell. It didn't really go anywhere. And risk to reward was not a good trade. So the trade you're looking for hasn't changed. We're still looking for this trade to happen. Break this structure here, and this is our first trade, and we would like to see it break out. Risk to reward, this would be an amazing trade because you will be getting something like around to the top there about 241 pips, and you will be risking an average of about, let's say, less than 100. Actually, you will get it in the pullback, so it's going to be less than 100. First, you want it to break out, and then you want it to pull back. So you will take the trade from somewhere here, which would be, this would be your risk, and this would be your first reward, and then you're anticipating that thing to go up. If it breaks this line, you actually you add more trades to it and you let it go. Probably 3 or 4 or 5 more trades on as it keeps going up, and keep that trade because that is what is going to build your account. Not trying to catch that little piece at the bottom there. You're likely going to lose your account if you trade at the bottom of an impulse. And this is the bottom of an impulse. This was an impulse. This was an impulse. This is an impulse. I think it's at the bottom. I may be wrong, but as far as I can see in this pattern, it's at the bottom for me. So unless it proves that this is no longer a bottom, I'm not interested in it. Wait for the breakout, and we will look for the trade to the upside. Aussie yesterday, we said 2 things could happen. They could actually reverse this, or they could make a corrective structure. We don't know which they're doing as yet. This could be the start of a reversal, or this could actually be the start of a corrective structure. And if we go have a corrective structure, we'll be looking for a sell. If this is the start of a reversal, it's a very small impulse. I would like to see a bigger impulse, and I would like to see a pullback like this before I take the trade to the upside. Which, like I said, you're probably not going to get a trade today. And the 1 hour, you do have a 1 hour chance of getting a trade. It's a very small trade if you take it. Allow them to consolidate here some more. And you can take this breakout. This may be a 1, 2, 3. Let me just use a different color. 1, 2, 3 before they go down. This would be a corrective structure if that happens. So the trade to the upside is going to be high risk because it's going to be against the impulse, the bigger impulse. What I do think could happen here today is I think they may be consolidating. So I may see a downside, I may see another upside, I may see a downside, another upside, something like this. Eventually, and by the end of this week, we'll be ready for this trade. So we still have to give it some more time because it's not ready. And if you're jumping into these candles because they're moving, well, you're chasing candles. You probably have very little understanding of what you're doing, right? We wait for a corrective structure. This is pretty much a very small move. It's not a corrective structure as yet, right? So let them do what they're doing, and when they're ready, we'll take the trade. If we miss the trade internally in here, we're looking for the bigger trade, which means if this thing comes down here and we don't get it, we'll wait for the breakout of this structure because the bigger trade is at the bottom here. This is the big trade, not this little piece in here. right? You're aiming for this big trade if you get it. That is the big trade I showed you guys yesterday. So let's see. That is going to be like a 10-to-1 trade. That's your risk to reward. So if you have the patience, you get trades like those. If you have the patience and if you have the understanding of how the chart moves and what it's doing, you would likely get those trades. Right? So let's go. So far, nothing that I'm interested in very much. The Pung is the only one I'm very, very closely interested in because I think this could happen today. There's a very strong chance of this breaking today. Right? Let's see, because we have news on the Pung in about 12:30 my time. So that's like in about an hour, 15 minutes from now. We have some news, and that may be the trigger that breaks out either to the upside or they continue to the downside. In any case, that would give us a sense of direction. To the downside, I'm not interested. If it goes to the upside, I'll be very much interested in it. Right? So let's go. Aussie, New Zealand. Let's see what New Zealand is doing. Pretty much back in, doing nothing. Let's go to the 4 hours. It's consolidating, which is what we wanted to see. We wanted to see some kind of a consolidation in this area. So if they consolidate in that area and then break, we will be interested in this trade. Right now, as you can see, if you know patterns, my traders will tell you, this would probably start doing this. And if it starts doing that, if you get in the trade and the breakout for some reason, based on your strategy, and it starts to do that, you take off the trade because you'd be looking for this. Right? So you may get into a breakout trade. It may be a wonderful trade, nice setup, but then the structure starts to change. And if you can recognize the structure, if you understand how these structures behave, and you see that that structure that you're in, it's actually not making an impulse, but it's already making some kind of an ending structure on a lower degree, right? Which means it's kind of making a lower degree ending diagonal, a lower degree, something of a kind that is telling you that this thing will eventually go back up. All you need to do is get the hell out of the trade and say, okay, let it do what it's doing because it's a bad trade. Initially, the trade was a good setup, but as the structure develops, you realize that it's not going to do what you want it to do. And very often that happens. So you either move it to break even. If you're up in profit, you move it to break even and leave it, watch it, see what happens. And I do that pretty often. I get a lot of break even trades like that I mean, sometimes it's 40 to 50 pips, 60 pips. I mean, on the euro yen, it was 100 and something pips, and I just put it break even and let it go. Right? Because I'm not interested in that piece of the trade. I'm interested in the bigger trade. And if you keep closing them, taking the 40 pips and the 30 pips, you will not get those bigger trades. Right? So it all depends on the strategy. My strategy, if I'm going for a 10-to-1 or 50, if I'm going for a huge impulse on a 240 and I get in on a 60 and the 60 minutes is not doing what it should do and I'm only 20 pips up and there's an next 1,000 pip for me, I'll just put it to break even and take the break even. Right? Nothing is wrong with that. That's trading. You understand the strategy, you understand what you're doing, right? And then you wait for another entry if it goes. If it doesn't go, it reverse. You say, thank God I'm out of it, right? Some traders like to say, well, I gave up 20 pips. I don't look at it that way. I didn't give up anything. I got out very lucky for break even because my target was 1,000 pip away, so I didn't give up anything. And if it had gone to my target, then I said, well, okay, you got it. It's working. So you have to look at trading from, your understanding of trading, your psychology. Don't you not because it comes back, take you out for break even, you had 40 or 50 or 80 pips, you lost or you gave up. Because if you keep chasing those, you will eventually not get the bigger target. You cannot get to 1,000 pips if every time you have 20 pips, you take it off. Right? Traders ask me that question. How do you keep it to 1,000 pips? I mean, there were a lot of pullback in there. Well, I put it to break even and walk away from it. I literally don't look at it. I have break even. That's it. I can go away. And then you know, sometimes you're like 100 pip up, and then it comes back all the way back to 20 pips, and then it goes back to 150, and then it comes back to about 80. And you watch that happen a number of times, and then the next morning you wake up and you're 450 pips up. And then you just leave it. It comes back 200 pips against you. And then the next day you wake up, you're 1,000 pips. Literally, right? So you have to learn to live through those pullbacks. You have to understand where the bigger target is and if you're going to go. What you can do is every time you get a pullback like that, if you understand the structure and it's a very nice structure, you can actually add another trade to that. and let it go, because the next impulse to the downside is going to give you profit in the second trade too, rather than take the first one off, right? Because sometimes you really don't catch those trades. If you take it on the first pullback, you take off your trade, you may miss the second and the third one, because if you remember what I said, you wake up and then you're 400 pips, which means you were asleep, and you would likely miss that trade. You would get 20 pips out of it, and you would watch it fall 400 pips, and you're not in it. It's gone without you. And believe me, that happens pretty often. I took out 100 and something out of the pound New Zealand, and I watch it go next 1,000 pip, and I'm like, 1,200 I took out of it, and I watch it go next 1,000, and I'm like, darn, you got out a little too early, right? So because there was a next 1,000 pip there waiting for me if I had only had the patience to stay in some more. I think there was a big event coming, news event coming up, and we were already 1,000 something, and like that's enough. You can take that. But sometimes that happens. You still get out a little too early. So let's go. New Zealand, as you can see where it is, we don't have anything. But if it breaks the structure, they will make a consolidation, and then there's a very high probability for them to bounce here, because the last time they did this, they bounced. You can see that, right? The last time they did this, they bounced. And there's a chance that this structure will have 1, 2, 3, 4, 5 waves in it. So let's see. If not, they can break, because we do have divergence. We have the possibility of them breaking right now. So if they break, we'll wait for a pullback, and then we'll take the trade. The bigger trade, most of you have seen, the bigger trade would actually be this big trade to the downside. I've posted this chart already. So most of you know that the bigger trade would be this trade. But we can also catch this trade. If we catch that trade in there, you have an advantage, because now when it breaks, all you have to do is add more trades onto it. Keep adding trades, because it's not going to go in a straight line, right? If you want to look back, you can see this didn't go in a straight line. There were a lot of pullbacks in it, right? A move down, a pullback, a move down, a pullback, a move down, a pullback, a move down, and a very big pullback before you get this, right? Very likely you will get out of the trade somewhere in here. You may not get this, because it's impossible to live through so long. Not in terms of the depth, but in terms of the time of the pullback, you will be out of this trade, right? Because it's going to be like this. Once you break that channel, you'll be out of the trade. And if you look at this, there's a lot of smaller pullback on a lower time frame, 60 minutes or so. You have a lot of pullbacks in that thing, right? Somebody please help viewer 848 to get some. Yeah, thank you. So let's see if we can get this trade this week, and that would be great, right? Let's see. Let it break, let it pull back, and then we'll get the trade. Don't jump in too early. At least not here. If you were in it, you should have been in it like, sometime yesterday. I already showed somewhere in here, in the break of that structure, but not from here, right? So we'll have to wait for the break, confirm break of that structure, pull back, and then we'll get in trade. U.S. Chiefs still keep crawling up, and yesterday we talked about the possibility of them breaking this top. They broke the top. We don't have divergence. That's a probability that they could still go up some more, right? They could still go up some more. We still don't have a buy setup. Here's the funny thing. Even if you put it in a 1 hour, you still don't have a buy setup. You have a channel going like that, but you still don't have a buy setup. So what you can wait for is if they come back here and they do this, if they bounce off of this trend line and go up, you can get a trade from here going to the top. Just to show you what you'll do. Don't jump into this one candle going up here, right? The chances this candle is going to pull back lower to give you a 3-wave pattern, right? Something like 1, 2, 3. The chances is going to do that and then go up. So what you will do is you'll get this breakout trade here, from here to the top there, right? So if that happens today, we can take that trade. Probably New York session if it happens. If this just keep going up, you really don't have any trade in it. It's not possible. US CAD. CAD broke out yesterday. We said we'll watch it to see what it does. It did make a higher high than this one, and it's kind of bouncing. It's not going very fast. One of the things you have to notice is when these impulses don't really go and they're pulling back so deep, it's showing you a sign that this structure is ending. So to the upside, we know CAD has some more. We looked at it yesterday. We talked about the possibility of getting to this target. And it doesn't look like we're going to get a very good trade to that point, even if it goes, right? Because if they're going to be making those deeper pullback, you will get +1 trades if you're in. And that is trading it in a 5-minute, which I don't like to do. So I'll just ignore it and let them do what they have to do to the top there, and then we'd look for the sell opportunity. The bigger trade on CAD is to the downside, and if you want me to show you why the bigger trade is to the downside, it's simple. You go to the weekly chart and you look at the CAD. This is what CAD has been doing for the longest while. It has been going up. Starting from here, it has been going up. It's about time it makes a downside very soon. So to the upside, there were trades, but it's limited now. You're at the top of a structure. On the monthly, you broke the top of the A wave. This is the A wave. This is the C wave. You're at the top there already of that wave, right? So you've made a wave, an impulse up, a pullback, another impulse, and you've made a pretty big impulse. Let me just take this out. You've made a pretty big impulse. Very sharp move up. This move is about to end, which means this move will have to either do two things: correct itself and then continue to go back up, or actually reverse to the downside. Which means the bigger trade and the bigger picture is to the downside, right? There are still probably smaller trades to the upside, very small trades, and you can see that you're getting a lot of divergence in the chart. It's about ending. This structure had divergence. This structure has divergence. If you make a copy of this and you pull it to the top here, we're pretty much sitting in that line. Not that it has very much, value, but it's kind of something show you that they may be channeling. It's rarely when they channel. Let me just clear this. It's rarely when they're in a channel, but they may be channeling. And if they're channeling there's a likelihood you will do this and you will do this. See that? You notice what they did here? They came down. Let me just erase this so you guys could see that. They came down here first, went back there, and then make a very sharp drop. Come down here, go up there, and make a sharp drop. That is very possible. So we would look for this impulse as finish. This impulse may be finish. If they start to make a consolidation like this back to this level, we would look for this impulse to the upside. So then that would be an interesting trade to the upside. But where it is right now, it's not a very interesting trade to the upside. So if you bring it in the 4-hour, you may get some trade to this level, like I said, but it's not quite interesting. Let's see in the 1-hour if we have anything. I still don't like it. It may give you a trade, but even in the 15-minute, it's a tough call. So in the 15-minute, you may have this trade. You're now breaking. Well, I think you broke already because it was pretty much like this. You broke out already. If you take this trade, right, we broke this structure. So we're looking at this move up, this pullback, and probably one more move up. We can fib this piece here for where the target should be. Target should be somewhere around here. So if you're going to take this trade here, you have to have a stop somewhere here, right? I would actually keep a stop here, but then that's risk to reward is not a good trade. So even in that case, this trade is not the best trade. I stay out of them. But if you want a very short trade, that's a possibility. Not a trade that I would take, but it's a possibility that they may just make one more spike like this again, up, pull back down, one more spike, up, pull back down. Just, depends on you. For me, I'll ignore them. It's not the type of trades that I like to trade. Right? Let's go. Yen. Yen is an interesting trade. And we are breaking right now. We'll allow this candle to stop. And we'll come back to this trade at the end of the webinar. Because we may have an entry in this trade here. Right? It's a short entry, but we will have a very nice trade setup. You notice we are breaking this structure. And there's a very high probability for them to break the low of this here. Let me just put it in the daily. There's a high probability they will want to break the low of this. Let me just bring it down. So we may come and retest this low here. Put it back in the 4 hours so you have an idea. And this trade could be a possible trade that will come there. Not in one move, probably in a number of moves. Probably short drop again. Pull back, short drop, pull back, short drop. And eventually they will get here before they decide to go back up. If they decide to go back up. But right now we are interested in the sell. And there's a good sell setup here for us. Right? It's pretty good sell setup. We needed to confirm that it's ready to go. It's not confirming. Just one candle moving. It hasn't confirmed anything as yet. So we will come back to this at the end of the hour. Allow this candle to close solidly. We'll come back to the end of the hour, and then we'll make a decision whether we want to take that trade. Euro pound. This broke the top. It didn't go anywhere. We can take this off because this is not valid anymore. And it's actually coming down. So let's see what we have here in a bigger time frame. Nothing of value as yet. I think they're just going to go sideways. Right? They're actually mostly doing this. And then we'll probably go up again. So we'll stay out of it for now. Euro Oz, and we're interested in these trades. Definitely interested. So yesterday, remember what I warned you about? Do not jump into this candle. Remember that thing was moving, and I said, do not jump into it, because if you jump into it, this is what's going to happen to you. They're going to pull back to this level, and then probably they're going to take off. So let's look at this in a 15-minute. So in a 15-minute, we have a very nice structure, corrective structure in the make here. We wanted to break this structure, break out of the structure. Remember, if it doesn't break out of the structure, it is likely going to keep correcting, right? They're likely going to keep doing this. So we want this to break out of the structure, pull back, and don't come back into the structure, and then we will take the trade to the upside, right? So this is another trade we would likely have today. If it comes lower to about the 786, right? Or, well, it almost came close to the 618, but if it comes, the next move down will be beyond the 618, which would be around the 786. We will take it as a fib trade to the upside. Right? Because I think it's worth taking this fib trade for one reason. We don't normally take the first fib trade, but we could take this one. So if this comes back down, we would look for a 786 buy. If not, we'd watch this trade break and then take the breakout. While I'm on it, let me also show you the Pang Oz. Same structure, see? This morning, it didn't break. It came down lower. Not interested in that sell because it's not going anywhere. We're interested in the buy. Remember yesterday I said, don't jump into this thing. It will pull back, right? They always do. See that? If you jumped into that, you're actually start worrying what's happening to you. If you're not stopped out, you're like, what the hell did happen to me? What is it doing? Where is it going, right? Start panicking. There's no need to panic. It's going to go up. Now, where you want to enter, this is not a point where I would buy. Risk to reward, that's not a good one, because if I buy here, I have to put my stop here. And if I put my stop here, my target is only right at the 270. So my first target would be here, which should be about 250 pips, but I would have to risk about how much? I'd have to risk about 240 to get it. 1-to-1, not a good trade. Wait for the breakout, and you're going to have a higher percentage trade. So in the breakout, we'll get the trade somewhere here. That's about 176 pips, but we'll be risking just about 80 to it. So we're going to have about a 2-to-1 risk to reward. That's for the first target. Very likely it's going to go much higher, right? Viewer 865. That's not what we do in here. We're not here just to look for a trade for you. We have 117 people in the room. If everybody is going to ask me to look at one chart for them, that's 117 looks at chart. That's not what we do. Please listen. I'm going to go through every one of the charts methodically. And at the end of it, we will get to your chart. At the end of it, then we can look at the charts that are interested in terms of trading. Thank you. Let's go. So, and please keep your questions for the end of the webinar. I'll leave some time for that. So watch this. If it breaks, well, you guys got to what? These are the good setups. This is a perfect setup. This is a very good setup. This is a very good setup. Euro Oz, Pang Oz, very good setup. Those are the ones you want to trade because they've already broken out of the bigger corrective structure. They're broken out of the daily corrective structure. This is a breakout of the daily structure. This breakout is a daily breakout. This is the 240 correction, and we broke that 240 correction. We're now in a 1-hour corrective structure. That is this one. And if you break that, you want to be in that trade. That's enough confirmation that this trade is going to do what you want it to do, right? It is likely going to go up. And if you want to keep it to the daily target and you manage to do that, that's amazing, right? because the break of the daily correction should send it to the daily target, which is the daily 270, right? So when we get into this trade, we will try to keep it to that target and not to the smaller targets. Even if you go to the 4-hour targets, that's the 4-hour 270, and that is not this 270 that I showed you here, but this 270 that is here. That's 570 pips. So if we can take it in the 60 minute, and not only to the 60 minute 270, but to the 240 270, that's 570, and we're going to be risking 80 pips for that, if you remember, right? About 86 pips, I think. So that's a good risk to reward trade. And if you can manage to keep that to the daily 270, which is way up at the top here, that's 2,339 pips. So 2,300 pips, and you'll be risking 80 pips for that. So that's the idea. You're looking for these trades, the trades that has potential to go. And these trades have potential to go. So let's focus on them. These are the good trades. I'm trying to show you guys how to trade, not to jump into everything that is moving, but how to really get the very good trades. These are the very good trades. The Euro Aus, the Pung Aus, probably Euro New Zealand. Let's look at it, see what it is, if it's ready to go. Euro New Zealand, very bad setup. It's probably going to go. The setup is, you see this thing is pretty flat at the bottom here. So I don't have a buy setup, although I think it is going to go, right? This is what it has, and this is likely going to go. But because of this flat setup to the bottom, I have to be a little careful of them not wanting to do this and then go, right? I have to let them negate that structure first. And unless they do that, I will just have to watch it for a while. I hope they negate that structure. And if they do, that would be a very good trade for us. So we can go to the Pung New Zealand, as somebody said, which has a very similar structure. See? Very similar structure. These type of structures, when they start to do this, this becomes your impulse. This becomes a corrective structure. So right at the top here, they can turn, retest the low, and then decide to go. Instead, we have this. So if you jump into this candle, you will be caught at the top there. Watch it come back here and then go. Right? Have you seen that pattern where they do something like this? 1, 2, 3. And then decide to go. Your stop was here. They took you out and then turn and go the opposite direction. Well, let's go look when they were coming down what they did. Look at this one coming down. This was your impulse. This was your correction. They broke. They went right back up, took out your stop, and then decided to come down. See that? So you have to be careful if you understand how pattern moves. There are a number of them. I could find, tons of them, because that is how pattern behaves. If you're looking for this smaller trade in here, you see they came up, they started to come down, go back up, and then come down. So there's a high probability that because of the way this structure is looking, the two New Zealand structures are looking, the trades we are getting are not very good buy trade setup. So if we're going to look for a buy setup, I will have to let this go. I would have to let it pull back. And now I have a good setup. I will have the trade right exactly where it is now. But I would get the trade. You see, I'm going to buy exactly where you're buying now. But now I'm going to have the trade with a good setup to go. So I have more confirmation that this trade is going to do what I want it to do. Rather than jump in the trade here and have to live through all of this. How many times you guys had to live through something like that with panicking, wondering what it's going to do, what the hell it's doing to you, right? It's not going. I was in, it went up 20 pips, and now I'm upside down 20, and it went 5 up, and I'm upside down 30, and it went 5 more up, and I was upside down 40, and then I took it off of minus 40, and then it took off like a rocket, right? Well, you're caught in the sideways corrective structure because you didn't have a clue what the structure was looking like, right? So when you understand structure and you see this, immediately I'm thinking, okay, come back here and then go up, and I would take this trade willingly. See the difference? I would not be interested in this sell. I'll be interested in the buy. But it's a different way of how you look at structure, how you understand what structure is doing and how it behaves. What if it takes off from here? Well, so be it. I'm not interested because I don't have a setup. I know it's going to go up. I'm telling you right now, this thing will go up. I'm looking for the bigger move to the upside, but I need to have a trade setup. I need to have a structural trade setup before I can take the buy. If I jump into that buy, I'll be caught with that trade upside down for the next 2 weeks, and I may even take a loss and then watch it turn and go up. So I'm not going to jump into the trade. I'll wait for it to correct. There's a very high probability that this thing will come back here, probably even do a couple more like this here, and then eventually break out of this structure to go. It's already showing me that the structure that I am seeing is not showing me that it's going to go up right now. If it goes, it changes structure, I get into the trade later on. So there is a difference, and that is why, although like I told you guys yesterday, it looked very simple when I show you, right? Most of the time the trade I'm showing you is after that structure has finished its move. Now you're in my webinar, so you see them early, right? But when I post the trade on TradingView and it goes, everybody say, how you know it's going to go now? Well, we waited for that trade like a whole week. Before I post that trade in TradingView, we were analyzing that trade for an entire week in our trading room and saying, okay, guys, let's wait on this one. And then eventually we said, okay, it's ready to go now. I'll take a snapshot, post it in TradingView. Half an hour after that, the trade breaks and take off. And you guys are saying, wow, that's great timing. No, we were actually looking at that thing for a whole week before I post it. So you're having an inside view of what we do in here, right? We look at these setups, we wait for them, and when they're perfect, we take them, right? So it's not that those trades are looking very nice, but remember, some of those trades we were looking for sometimes weeks, sometimes 3 weeks, 4 weeks. And then we see the setup and we said, okay, now it's ready to go. But we look at them. We look at every one of these charts every day, twice daily. Right? That's what we do in here. And at the same time, it's good for my traders because they're learning how to analyze charts. You guys will not get the full cream of it because you don't know the rules. You don't understand why I'm showing these things. I'm telling you what I see, but I'm not telling you how and why I understand it that way, the analysis of it. That's something my trader look at it and say, I know what he's saying. I know what he's talking about, right? You don't know that, right? All my traders look at it and say, okay, I see what he's talking about immediately because they understand the rules we use. They understand the structure, how we read structure. They understand everything. Sorry, but you'll have to really take the course to do that. And I'm not trying to sell you the course right now, right? Let's just go ahead. So keep an eye on the EURUSD, keep an eye on the POUND. Those two are very good setups. You can keep an eye on this one if it breaks. This is a very good one. If this breaks, and this has a very high probability of coming out here today, if they break, we will be interested in that trade to the upside, right? There is a chance they may go down some more. And we're not interested in the downside. They could come back here. We're not interested in this trade. We're interested in the trade to the upside. So we'll move fast from this one. Swiss, stay out of this for a while. I would just skip it because we don't want to spend time in it. I know why we're staying out of it. Pound yen, somebody said pound yen break. Yep, it broke. Wonderful. You have to wait for this hourly candle to close, which is 15 minutes from now. And then you have to wait for another 30, 40 minutes before you take the trade. So all of you want to know how we trade breakout trade. That's the most popular question in TradingView. If you stay in here long enough, you probably will have an idea how we do some. These are 1 hour breakout trades, how we do the 1 hour breakout trades. You have to let this candle close. If you don't let this candle close, what you could likely have on this breakout is a wick like this. See that wick? And this thing in the next hour reverses, or in the next 15 minutes reverses and keep going up. So we allow it to close and prove it's going down. Let me show you a number of places where those wicks could actually get you. See this one here? You had a breakout here. See what happened? They broke out, you got a wick, and they go right back up. Right? Silver is a good example yesterday. See, how'd you know he's saying, right? Remember what I said about silver yesterday? Don't jump into a moving candle. They can reverse the new. Don't jump into the moving candle. It could stop here and the next hourly candle comes back all the way to the 680. Very, very possible, right? That's the whole cream of it. So you notice my traders are not very nervous. They're not saying, oh, this one is moving, that one is moving, because if they do, they'll find themselves in big trouble, right? They have to redo the course. So no need to rush. Let it close. Let it prove it's going to go down, and then we'll come to it. Aussie, New Zealand, getting interesting now. Yep, it's starting to get interested. I like it actually. There was a chance we'd probably buy, but it wasn't looking very nice yesterday. Let's look at it on the daily. Let's relook at this. The only thing I don't like about the buy here is we didn't break this low. It didn't really break the low, but here's what we're going to do. We'll go to the 4-hour. We are breaking this stop, so there's a chance that this is going to make either a 1, 2, 3 wave structure, even if it's going to come down, right? So there's a chance they're going for a 1, 2, 3 wave structure. And there's a chance they're actually starting an uptrend. Right? There's a chance they're actually starting an uptrend if you look on the 1-hour. Right? Very high chance that they're going for an uptrend. Let's see what the MACD tells us. Not very encouraging as it is right now, but we don't know what it's going to do. So here, we're going to skip this one. Let it go. And if they're making an uptrend, what they're going to do is they're going to consolidate after that move. And we would take the breakout. Remember where we're gonna get a buy here, and you're here right now. See that? This is the difference on your buy, but this is proof that it's going to go up. If you jump into this here and it comes here, right? You may get this trade if you're lucky, because you're not gonna know that that is the top to click it out, right? You will have to live through a couple of this, and you may get a +1 or +2 or +3 pips trade, and watch this go, and you're gonna miss that. Because once you take the first trade, once you take this, you jumped in here, and this thing moves here, and it come back here, and you got out of the trade here, you're not going to take the next trade up. You're not, psychologically, you're not going to buy that trade again where you just exit. You just exit that trade. You're not going to buy it again. So you would actually lose the new impulse going up. So what we do is we wait for it. Let this finish. Let it prove it's in an uptrend. Let it prove to us it's not doing an A, B, C, and come down. If it does that, perfect, we will get this trade. Good for us. But if it consolidates to prove the upside, then we will have a very good trade. We just ignore the pump chief. Nothing is happening much on it. There isn't anything interesting happening. It will take a number of hours, maybe until tomorrow. It becomes interesting. I'm trying to make the webinar short for you guys, so I'll skip those that are not very interested. Right? Aussie Chief, we're very interested in this. Very, very interested in this trade because this is a perfect consolidation after a nice impulse. This is your impulse. We broke the uptrend, that uptrend they had there. We are consolidating here. So if this thing goes down and it breaks out, I'm putting it in a 15 minutes so you guys could see it. We wanted to break this structure, move back here. We will sell right in this level, and we'll put a stop somewhere here, and the trade is all the way down. Right? So keep an eye on this trade for the breakout. This is a very, very, very good trade setup. I may even post it on TradingView because this trade setup, we were anticipating this move a long way back. See that? I actually posted this on the daily. I showed you guys yesterday. This is no guessing business. We know this was going to go down, and we're looking for it to come down all the way to here. Well, with a number of pullbacks like these. Right? See, they have some very deep pullback when they go down. So you will have to, be able to live through those pullbacks. But this trade, even if you get this impulse, is a very good one. Even if you get this next impulse to the downside, the trade is perfect. So keep an eye on it, and it's about to happen. Right? This could likely happen today. So watch it. Aussie Swiss. Keep an eye on this. Aussie Yen also going down. Right? If, like I said yesterday, some of my traders may get it from there. If you don't get it from there, watch it for the breakout now. We want the breakout, and it's going to drop down. You're going to have, I don't think it's ready. We'll have to let it, prove it's ready, and then we'll get this trade here. And then it may go into deep consolidation before it goes back down. Let me just show you why we think so. Because that is how it moved every time. See that? Every time. The first time, this was a little drop here, big consolidation, then the next drop. They had that little consolidation. You see that little consolidation there before they drop? Big consolidation, drop. See that little consolidation in here? Let me just put it. See that little consolidation, drop? Big consolidation, drop. See that little consolidation there? We're dropping after that little consolidation. The drop should be somewhere here. Bigger consolidation, next drop. Right? So it's actually repeating itself. Wonderful. You don't want to see structures more, these are perfect structures almost. So what we're looking for, and I've actually posted this way back, so we're not going to go into it again today. We're looking for this to come here. We'll go in the 60 minutes. That's a daily chart. So we can go in the 60. If you miss the first big consolidation, which was this one, the break of that consolidation, you probably missed it. What we're going to do is you can put an entry order at the low here. If you don't want to miss this, here's the next technique we can use, is you can put an entry order under this low, right? If you don't want to miss this. And if this goes through pretty fast, it may pull back in you, but you put a stop here. And you would try to keep this until it goes to about where the bigger target is. And in that case, we will put the target. Let's fib the bigger move for the target for you guys. So we're going to fib this one. And we'll look for the 618. The 270 is a must, but I think they will probably go through that 270. So if you put it in air and they go through this 270, they're likely going to come to this 618 before you may start to get that bigger consolidation. So you would have a risk to reward trade, which is you can have an entry order here with a stop. With a stop above here, that's like 127 pips. And your target would be from the very same spot coming down to this one, which is about 192 pips. Not the best trade, but a good trade. And there's a likelihood they could go beyond that 618, right? Because they may go, a distance of this magnitude. So let's see if, how they behave in this one. And we'll take the trade. If we get the trade, if the trade consolidates more, if it consolidates some more and come higher, it's going to be a better trade for us. So what we'd like to see is more consolidation in here. And this would give us a better risk to reward trade, right? Because now we're going to have the same trade coming to the 618, but we'll take it from there and we'll have a stop here. So let's see if we get more consolidation and then we come back to this trade. Aussie CAD. Pretty similar structure. It's coming down. We broke this structure here. We made an impulse. We're consolidating. Not the best consolidation. Let's see a 15-minute what it shows us. It's kind of messy because of how this structure looks. I think what we can do is wait. I don't like the way this structure is showing. It's showing that there's a possibility for more upside because this could actually just come down slightly here and then go back up like that before they come, making this structure a three-wave structure, right? 1, 2, 3 before they come down. So I think we'll wait on this one. Just skip this one. Take it off. It's not really the Aussie yen is perfectly structured. The Aussie CAD is not. The Aussie yen and the Aussie chief is perfect. The Aussie chief is the best. This has a very, 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 very good structure. You don't want them better than this for the downside. So let's wait on this one. Skip the Aussie yen, skip the Aussie CAD. Because if they go, they will all go because Aussie is the lead in them, right? Aussie is the one that's going to actually be pushing them. New Zealand CAD, I think we were skipping. Yeah, we skipped that yesterday. Let's skip it because it's going down, but you didn't have a real good selling structure in it. Let's see in the daily what we're looking for. Yep, daily we're looking for it to come back here. I showed you this structure, but we have to wait for a pullback. We have to wait for this 4-hour impulse to finish and pull back. It did give a little pullback in here, not the best. Let's see if we had an opportunity to go in there. 1 hour. Not really. You didn't. Yeah, you see they break the low. Most of you don't know these patterns. This is a running flat, so you will not be able to trade that. You probably would have been able to trade this. So here's what we have. We have a 1, 2, 3. Let this finish what it's doing, and it's going to make a deeper pullback, and then we'll look for the trade, right? Because you wouldn't be able to manage a trade like this if you jump into it now. The best thing to do is let it finish. You notice you're getting divergence here, right? Let it finish this piece, and they're going to make a deeper pullback. When they finish this, they're going to make a deeper pullback, and then we'll take the trade. So maybe ending this week, we could get that trade, right? It's a very big trade. This is only the first impulse of that trade going down. So let me put it in the daily. You can see what we're looking at. We're looking at a trade to come here because of this pattern, right? This bigger pattern, 1, 2, 3, 4, 5. And we're at the very top of it. Would have been a brilliant idea. If it wasn't the new year, would have been a brilliant idea to sell it at the top there. but it was a new year. Actually, my traders were supposed to do that, but I wouldn't ask them to do it because I didn't do it, and it was in the new year, right? It was mostly holidays. I wasn't trading. I don't think anybody was trading. But the best plan was to sell it here and put a stop above this, right? And then you would be in a good trade. So now we'll have to wait for this impulse to stop. We'll have to wait for a correction, and now we'll be in this trade going down. So this is not the best correction to show you, but it's a correction, but it's more like this correction. You want this impulse to stop. You want to see a correction like this, and then you can take this one down. If you live through, there's not always you're going to have a deeper pullback like this, right? Sometimes you get it, sometimes you don't. If we don't get a deeper pullback like that, we will manage to catch this trade all the way to the low. I don't anticipate them giving us, after they've made the initial pullback, the first pullback here, I don't think they will make a deeper one. So we may get a drop, a pullback in here, and then another drop and a pullback like this. So we could have at least this trade to the downside. And if you have the psychology to stay in, you can stay in all the way to the low. When they break this low, then you will move your stop to take off the trade. Right? So viewers 863, glad to help. That's why I invite you guys for a whole week here. Hope I can help you. And you learn something. Here's the thing. If you don't learn very much, what you will basically learn to do is stay out of bad trades. Right? You will pretty much learn to stay out of bad trades. I'm sure you can take that lesson from this week of webinars you're getting. New Zealand yen breaking, wonderful, good breakout. Let's see in the hourly what we have there. We had an hourly flag that just broke. Did that break earlier or did it just break? Okay, it just actually broke. It broke slightly earlier, but that wasn't a complete break. So we'll go with this. What you can do now is you can wait for a pullback on this, sell, and put a stop there. Normally, we'll wait for a pullback that doesn't reverse the candle. So here's what you're going to do. You're going to wait for this to close. We're going to wait for a couple sideways candles here. 3 or 4 15-minute sideways candles that does not reverse this move. Right? That's a strategy I'm giving you there. Wait for a couple sideways candles that does not reverse this 1 hour candle. If it reverses the 1 hour candle, don't take it. If they don't reverse the 1 hour candle, you're in that trade and you're looking for a bigger move to the downside. Right? So this is a good setup actually. This is a good one. CAD-yen, also good setup here. Let it break. Let it close. Let it go 3 sideways. Take the trade. Actually, the trade was a good one if anybody took it there. But this had already gone yesterday, right? So remember what I said, wait for the pullback. You got the pullback. You can take the trade on this candle. Close, a couple sideways. Take the trade in a 15-minute. New Zealand Chief, we're getting some sideways move. Let them consolidate. See that? We're getting some nice sideways move here. You can let it consolidate if you want. If you want to take this trade for a longer run, here's what you can do. You can take the trade here, put a stop here, and keep it for the longer run, right? There's a likelihood they're going to probably do this. But you have to be able to take this risk and be willing to lose it because you're taking a high risk trade here right now if you don't wait for the consolidation to finish. But I like this trade because of the higher probability of this trade coming down all the way to the low here. So basically, it's a trade that I would take. It's a trade that I would take because potentially you're looking at it on a daily time frame and you're looking mostly for this to happen. This is only your first impulse down. This was a deep pullback and you're looking for at least one more retest of this 270 here, which is this trade with a stop above there. So all you have to do is percentage-wise on your account. Don't risk more than you normally risk. So if you risk 1% normally, don't risk more than 1% in the trade. So if you lose it, you lose 1%. Right? We haven't had a complete consolidation, so it's a high-risk trade. But it's a very good trade in that if you get lucky, and I'm repeating this, if you get lucky, some news event may do something like this and just tanked it. It's going to go around pretty fast. See this? It's going to go down pretty fast. If you took this trade here on the earlier case and you got lucky, you got this. And that's luck because you're expecting it to go. but you're not expecting it to go that fast. If it goes that fast, good luck with you, right? And if you're very lucky, you may get one of that. I don't think you're going to get a repeat of that, but you could get this. So you may get lucky and get one of those, right? It's good to trade on the side of technical luck, which means you're taking a technical trade and hope that some news event gives you that trade better than you wanted it, right? Let's go. Cat Chief. Cat Chief, we're consolidating. We're pretty much, the question was, what is going to happen to this? Is it an ABC or is it the ABCD? By the way, this is a wonderful pattern if you want to learn pattern. You can actually watch this pattern play out to that E wave and then drop, and you can sell it to that E wave. So right now we're in this consolidation. We were looking to buy it, I think, and it didn't. The buy was okay. I actually took out some profit out of it, but then I got out before the New Year's. Remember, we bought this breakout, and everybody freaked out when it came down back, and a few people called me. I said, okay, wait for it to come back up and take off the trade. I don't know how many of you did that. Wait for it to go back up, take off the trade. Because what we're going to do here is we're going to consolidate in a sideways move, and then we're going to drop, and then we're going to go back up, right? So they're actually consolidating in a sideways move right now. They're not expected to do it very fast. So you may see more pullback to the downside here. You may see more upside again, and then you may see this, and then you're going to get the upside, right? So once you understand how these patterns move, that's what you're going to be looking for. We're looking for that up pullback. You notice this pullback down here? Look at this one. Pull back down here, and then they went up, right? All of them pull back here, and then they went up. Pull back here, and then they went down. So we're looking for this pullback down, a move up, a pullback, and then up, right? Pretty much a 5-wave structure. There's a triangle, wedge-looking pattern, and then you're going to look for the downside. So on this little piece, get out for positive, leave it alone. We will look for this trade if we get it. If we don't get that, we'll look for the up trade. The up trade would be an easier buy if we get it. All right, let's go. By the way, this is the nice trade to look for. Swiss yen. Okay, that came down a lot. Let me see if we can put it in the daily. Yep. Probably use this last two and see what they're doing here. You don't have anything right there now because it's gone. Wait for it to come to the bottom here, and then if they make a pullback, we'd look for a sell setup. You don't have a setup right there now. Silver. Remember what we said yesterday? Don't jump into it. Silver is a long-term trade for me. I keep just buy silver. I don't worry with it. I think, remember I told you they're likely going to consolidate in here. I still think they can come back to the top here, and then we're going to look for this drop. Remember, every one of you should have an entry order here. I mean, seriously, all my traders, by the way, my traders, all of you should have entry orders. I have entry orders there to buy. Buy orders, right? If they come here, it's a buy limit. Buy when they come here. Now, they can drop. They may drop from here, actually. I don't think they will drop from there. I think they're going to keep this consolidation going for the next week or two, and then they're going to drop, right? So I'm pretty sure all you guys do. You better do, because if you don't, you're going to be in big trouble. So everybody should have an order to buy there, right? And then we're going to look for this to let it consolidate. If you're in buys in this area, every time it comes back to, if it comes back to the top here, take some off. Take off the profit, because if you have buys in this area, right? So take off the profit when it comes here, and keep one small one. Wait for it to come back, and then do the buys at the bottom. 1 ton of silver. Sherman, you're funny, but you may have that amount. I'm pretty sure. All right, so let's see. We're going to be looking for that. Gold. We are coming to gold now. Let's look at gold. Gold is pretty much also going sideways. Not very. It's a little. They're both at the bottom of a structure, but the gold has already made the bottom. So the gold is a little. It's a little different. The gold has already hit the bottom. Silver didn't hit the bottom. So gold may actually just keep going sideways here for a while, retest the low like this, and then go up, right? I don't think they'll break the structure. I don't see them breaking the structure. Right now, they're in a consolidation. So let's wait and see how they consolidate, what they do. And based on that, we'll decide what to do with the structure, right? So gold, I think the best thing to do is stay out of it for now. Yep. That's the idea. Buy at 13. Well, 35, I'm not sure we will get to 35 that fast, but you can get to 20 something. And if you buy very good at 13, you can exit the 25 and do go party. Yeah, I like that idea because that's what I've been doing all the time in silver. Buy at the low when it goes to the high, exit the trade, and then wait for the low again. Right? It's pretty easy. It's not a hard thing to do. Oil, oil's still in this pattern, right? I'm not, oil is highly manipulated. Oil is a big political game, but remember what I said. Even all these big political games, they're still all within a structure. They still all behave. It's a psychological behavior of the market that creates these structures, and all these structures are already identified. There are a number of them that are already identified, and looking at this structure, it's telling me that they may drop to the low, but eventually they're going to go up very soon. You can look at it. The MACD is showing you that there are chances that this thing is going to turn very soon. So we're keeping an eye on it. I don't think this is an ending diagonal. I'll be honest with you. I don't think it's an end. That's not how ending diagonal looks. But there's some kind of a bottom making here. What I want to see is this fall through this bottom, and I think they will. And when they do, we're going to change this into channel. This is what most likely we will see. Let's make a copy of this. We may likely see something like this, kind of channeling, right, of this structure. We may see this slowly come down like this. Sorry, like this, come down, go back there, come down, go back there, come down like this, somewhere around this area. Around the 20 area is disaster, so it's probably going to start to go back up pretty fast. Well, disaster in terms of production. A lot of oil companies will start closing down because production costs for them is not going to be worth it, right? Like in Russia, they've frozen a number of projects that they had started. Those projects are now frozen, and they're waiting for oil price to go up back before they go. And they're looking at the number of them in the north of Russia, which is pretty icy, right? It's some winter in there, and drilling conditions are rough. Cost of production is higher than they would want it to be. So what they've done is those projects, new projects that they were looking to drill, and so they're actually those are just frozen right now. And if they keep doing that and they keep freezing projects and they keep closing some because it's not worth it, if it goes to 20, it definitely is not going to be worth it, right? And a few of these Russian oil companies have already said that if oil price keeps going down, what they're going to do is they're going to reduce the amount they're drilling because it's not going to be, like some drilling places are going to go right down to the limit just to function because the cost of production at those areas, production, transportation, everything else is not going to be worth it. So if that starts to happen around the world, oil price is going to go up, right? So these are the kind of things that you look for because it's at a low, and maybe I think we could see them drop to this limit and then start going back up. No, that's not the cost of production. It's production, it's transportation, it's investment, it's tax, it's a lot of different things. The profit that they will make for it is not very worthy of them. Cost of production in the Middle East is much cheaper, right? Cost of production in Russia and the conditions and some of these new projects that they're starting. Remember, they don't only put the cost of just bringing the oil up. There are many things that are put into that cost, including future development of the thing, right? They put a certain percentage that it goes to future development of new oil fields and all of that. The guy was explaining it a very long stuff. I don't care. I don't listen. I'll just worry, listening to his ideas and then looking at the structure to see if they make sense, right? He was explaining why all these projects are free. They're freezing these projects because those projects were actually projects that were money they were supposed to take from oil that they were supposed to sell at $40, $50, $60 a barrel, right? They took part of that money that they were going to invest into future thing, and that is not happening. So that investment is no longer there. You follow what I'm saying, right? So I have no idea how they do all these calculations. What they're simply saying, actually, he said even if it goes to $5 a barrel, we could still produce oil, right? It's okay. The cost of the oil itself, if they just take the oil out and sell it, refine it and sell it, even $5 to $10 is okay for them. But they can't invest. They can't reinvest in new projects. They can't take more new loans to reinvest because you have to pay those loans. They can't hire more staff. They can't get more specialists on. They can't go and look for new oil fields, all of that, because they don't have money to do all of that. Right? So Whatever, whatever it's there. I don't know how they do that stuff. I was just listening to this guy, so I'm giving you an idea, a very, very rough idea of what he was saying. Right? But I still think if it goes, I don't think it's going to go to $10. I mean, honestly, Saudi Arabia is already in a deficit. Their budget is having a deficit, this year. The next year, 2016 budget has a deficit for Saudi Arabia, which means although they're making profit, they're not producing enough oil to cover their expense as a country. And that's not a good thing, right? You can't be an oil rich country and have your budget in deficit. Then what about the people who are not oil rich? So it kind of shows you that the price of oil will go up. Although they want to, kill competition and get some people out of the market and all of that. Oh, they're putting taxes on you people for that, right? So you will pay the deficit, right? Since they don't want to raise the oil price, they'll let you guys pay the deficit. Do you guys pay taxes in Saudi Arabia? You're from Saudi Arabia, Mohammed? I thought you guys don't pay taxes. I thought the government gave you money. Yep. Okay, in India. I see. The king pay tax to them. Okay. Because I know in some of those countries, they actually, the nationals get money from that thing rather than pay. 9:06 just joined. The webinar is actually over. We're going to be looking at natural gas and then we'll call it a day. Natural gas, remember what I said you guys want to do? You want to buy. It's consolidating. Wait for the consolidation to over and buy. It's still consolidating. So don't rush it. It may take a couple of days more to consolidate and then you'll have a nice trade to the upside. What are you looking for? Somebody wanted me to look at which one? Something S&P 500. Let's see. S&P 500 is not going anywhere, guys. Let me show you this chart. I actually posted this chart. Somebody was going crazy about buying or selling, and I said, you got to be careful. Watch the structure. And I actually posted this chart. I think on the daily. Let me see if I can find it. Yeah, it's just in consolidation. This is what I posted. See? I think somebody was saying it's a killer sell they're going to be selling, and I was like, why are you selling? It's actually in a consolidation, right? And the consolidation will go to the upside. So let's see what it did. Isn't this chart amazing? You could just click and watch to see what it does. It went to the top and it came right back down. I think they were buying or selling. I don't know what they were doing, but I was like, you got to be careful. It's in a sideways movement. So we came to the bottom. The question is, are we going to go back up to the top there now? Right? See, it actually followed the arrow down. So is it going to follow the next arrow up? Let's see. Question now is if they're going to follow the next arrow to the upside. And I believe very strongly that, yes, you can see this happen. And you may even see a breakout, or you can see them come back down. See that happen. And you may see a breakout, or you can see them come back down. That happen. You can see a breakout. 1 in 10 chance for them to do this. 90% is they're going to go up. When you see this structure, there's a 90% chance for the upside. 1 in 10, you look at these structures and they come down. I literally mean 1 in 10. Those structures are going to go down. Right? By the breakout, only if it breaks out. Nothing has changed. We're in a consolidation. And you have a 90% chance of this thing going up rather than coming down. Right? See? That's how simple charts are. I don't know whose chart I was looking at when I said this guy is creating trouble for himself. So I decided to post this chart. I don't normally look at this. I just post the chart so that the person could see that whatever he was trying to do is going to get him in trouble. It's going to go sideways, up and down. It's not going anywhere. New Zealand yen. Let's go look at that. And I'll take some questions after that, and then we'll close the webinar. We're still an hour 15 minutes. We normally finish these webinars in 40 minutes. So let me look at the New Zealand yen, and then we'll. Okay. 1 hour. It actually closed solidly. Yes. Here's what you're going to do. Don't jump in this one. Wait for it to pull back here now. Let them pull back at least about this area, 50% of this candle, and you can take that trade. Put a stop here. Right? What you want to see actually is a little sideways move. You want to see this thing, make a couple sideways move here, and don't go back up on a 15 minute. So we can go on a 15 minute and look for that. On a 15 minute, you want to see this thing come. This was the close of the hourly. So you want to see this go back up, this go back up, this go back up like this, but don't go back to the top here. and then you can take that trade. So it's like an hour from now, you want to see 3 or 4 15-minute candles sideways and take the trade. If the 3 or 4 15-minute candle goes, well, you may miss it. Okay? Because every time you jump in a trade like that, hoping that it's going to go, you're going to lose more than 50% of them. We have tested that already. And I mean, we have tested it. You're going to lose more than 15% of them. If you don't believe what I'm telling you, look at silver, what happened to it yesterday. See that? See that reversal there? You don't want to get caught in a reversal like that. Right? So there are very high chances that if you don't do that, you're going to be caught in a reversal like that, where instead of going up, they actually came right back down. So, once in a while you will lose a trade like that, but on the bigger picture, you want, if you get the proof of the trade, it's going to be a nice trade. So let's look at pound coming down and why we are not interested in the pound going to the downside. Yes, something like that, lower time frame. See why I'm not interested in pound going down, right? Because it's actually, the bigger picture of the pound is to the upside. So all these bouncing around they're doing here, you just have to have patience to wait it out. And if you wait out for these little moves to finish, you end up getting the big trades, right? So sometimes you just got to wait it out for those little moves to finish, right? For that one impulse to finish at the bottom and turn. And then you get the next big move to the upside, right? So what we were actually doing here is we were waiting for this here, this impulse that started here. We are waiting for it to finish at the bottom here. Eventually, it's going to finish. And then we would look for the big move to the upside. This one and that one. And if you get 1 or 2 of those a week, you're okay. You may get more, but if you get 1 or 2 a week, you're doing pretty good. So for today, there were one more trade that broke out that we wanted to look at. I think was anybody remember which one? The pound New Zealand and one more. Anyway, you guys keep an eye on it. You know how to trade those things. You have a strategy how to trade. My traders will go in the trading room. We'll look at those trades that we watch. Pound Oz. Let's look at the Pound Oz and see if that is one. And the Pound the UJ. Let's see that. Let's look at the UJ first. Yep. Also broke out 1 hour close. Same thing. The next 1 hour candle already start moving. Put it in a 15 and see if you get a little pullback in it. If you get a little pullback, you can take the trade. It's worth a take, right? Put a stop here. Don't risk more than that because we were anticipating them to go to this level. You're looking for them to come here. So you want to make sure you have a good, if they come back to this level, you take this trade and then this would become your risk. So risk to reward, you have a better trade. You're going to look for it to go lower, right? Remember, we wanted to go lower and test this line, this blue line, right? But at least when it comes to this level, you can put it to plus whatever you want. So you can't lose in the trade, right? CAD-yen, I think we looked at CAD-yen, but let's take a look again for you. And then we'll call it a day. CAD-yen. That's Swiss yen. CAD-yen is here. More like it. Same thing with the CAD-yen also. You had a 1 hour break. The second hour actually went down some more. Don't chase it. Wait for it to come back. It will come back some. They will always give you at least 3 or 4 candles pull back. And you can take the trade at the better spot for the same target. You flip this for your target. $270, and you can look for the 618 also. I think they will go lower. So you can wait for that little pullback. Don't jump in it too early. You jump in too early, you may see a reversal rather than just a pullback. You want to see that sideways pullback before you get in it. Confirmation on a much lower time frame, right? Not on the higher time frame. A corrective structure is normally a bigger structure, actually, and this is a corrective structure. This here is a corrective structure. We're not looking for a structure at the bottom here. We're looking for some kind of a smaller consolidation, right? Not so much as a bigger structure, right? So we're looking for some kind of a smaller consolidation there to say they're not reversing it and then go into it, right? Because nothing is happening. The pound chief is just going sideways. That is why we ignored it for now. It's in a consolidation going sideways, a bigger structure, consolidative structure. The New Zealand broke to the downside. That's a good trade. You guys keep an eye on it. Same thing. You want to close. You want the hourly close, and you want to see that sideways, right? Yep, we have an hourly close. Same thing. It's moving, but let it come back. Remember, because if you don't let this come back, you're going to be caught in this structure. See that? So if it comes back to the top here, sell it. Sell it from there, put a stop here, and you're looking for it to come back here and then actually go down, not go back up. But if it goes back up, you get +1, right? Pretty much that's a trade. It's always good to wait for that pullback. In this case, I would even wait for in the case of the New Zealand, I would even wait for a 4-hour correction. I would personally wait for a corrective structure before I sell it. Because I'm looking not for this small trade to this level, but I'm looking for the bigger trade. My trade would be this trade here. So I want some proof that this is actually going to go. And after a 4-hour impulse, it will pull back. This is a 4-hour impulse. It will pull back and then go. They always do. Let me show you previous move down. After a 4-hour impulse, they did pull back before they make the next one. They actually even pull back much deeper after that. But after a 4-hour impulse, you always get a pullback. After a 4-hour impulse to the upside, you got a very deep pullback. So if you jump into this trade here, you'd be upside down at this level. Same thing here. If you jumped into this trade at the bottom here, you're likely going to be upside down when they pull back before they go. Right? So, okay, guys, it's easy because here's why trading looks easy the way we do it. Because I'm not showing you the hard stuff in it. I'm not showing you what you do with a chart when there's nothing in the chart. You're looking at a chart that I already prepared. So let's take any chart you guys want. Let's take Mexican peso that we don't really trade that much and take everything out of it. I'll show you how difficult it can be for you if you don't know how to do this correctly. Right? Remove all drawing tool and put it in a daily chart. And if you're stuck with this chart and you have to decide what to do it, I'm pretty sure all of you will be confused already, right? I can make it a little bigger for you so that if you look at this chart and you tell me where you think it's going to go, let's for the fun of it tell me how many of you think it's going to go up, how many of you think it's going to go down, and let's see. Just type up or down and then we'll see. Just type A up, U for up, D for down. Everybody, let's see. So more than 50% of you will already be losing your money. See that? Because we have about 50% up and 50% down, right? So in terms of trading, 50% of you will lose your money. You decide which side of the 50% you are on. I'm not going to tell you, right? So 50% of you are definitely going to lose your money, almost, right? Well, not necessarily because you have divergence, they're going to go down. But that's a sign that they could go down. Right? So I'm trying to show you that it looks easy when the chart is already prepared. When you're looking at a chart that is not prepared, it's much more difficult because there's much more to it that I don't show you. What I do is I bring a chart up like this. And I said, okay, this is what we're looking for. But this chart is already prepared. So you can clearly see it. You can actually see what I'm looking at. Right? You can visualize it. You can see it. What you don't know is how to prepare the chart like this. And that is what I teach you in my trading courses. How to do it like this. If you want the knowledge how to do it like this, then you take the course and you learn to do it the way I do it. Nora got her Mexican peso, right? No, we have a trader who trades Mexican peso, right? So they're just having fun. So, okay, guys, I'm glad you're here. Thank you for coming. We had a lot of people. We had about 112. Let's hope this afternoon we get above 200, which means bring a friend, invite a friend, and I'll see all of you in the New York session. Thank you for coming. Have a nice day. Trade with care. See you in the New York session. Thanks and bye-bye.